time period. Assumption that states that the economic life of a business can be divided into artificial time periods. Accrual basis of accounting that is in accord with the GAAP and states that the economic events of a company should be recorded in periods in which they occurred. Also, revenue is recognized in the period in which the service was performed. Expense recognition principle or assumption dictating that efforts be matched with accomplishments. Adjusting entries are made to ensure that 1. Expenses are recognized in the time period in which they're incurred, 2. Revenues are recorded in the period in which services are provided, 3. The balance sheet and income statement accounts have a correct balance at the end of the period. Prepaid expense assets paid in cash and record before a company use them. Unearned revenues cash received before a company earns revenues and recorded as a liability until earned. Accrued expense expenses incurred but not yet paid in cash are recorded. Accrued revenues revenues earned but not yet received in cash are recorded. Prepaid expense before the adjustment, this transaction has overstated assets and understated expenses. Unearned revenues before the adjustment, this transaction has overstated liabilities and understated revenues. Accrued expense before the adjustment, this transaction has understated liabilities and understated expense. Accrued revenues before the adjustment, this transaction has understated assets and understated revenues. Prepaid expense to adjust this entry we must debit expenses, credit assets. Unearned revenues to adjust this entry we must debit liabilities, credit revenues. Accrued expense to adjust this entry we must debit expenses, credit liabilities. Accrued revenues to adjust this entry we must debit assets, credit revenues. The trial balance of supplies is 1,350 and supplies expense in 0 if 600 of supplies are on hand at the end of the period. The adjusting entry would be supplies expense, supplies. $750. What type of account is accumulated depreciation? Contra asset. The XE company computes depreciation on delivery equipment at 1,000 for June. The adjusting entry to record this would be debit blank, credit blank, for 1,000 both. Depreciation expense, accumulated depreciation equipment, proves the equality of total debits balances and the total credit balances in the ledger after all adjustments are made. Adjusting trial balance. Neutrality is an ingredient of faithful representation. Provides the primary basis for the preparation of financial statement. Adjusting trial balance is prepared after the adjusting entries have been journalized and posted. Adjusting trial balance. What is the type of adjustment in this situation? Supplies of $100 are on hand. Prepaid expense. What is the type of adjustment in this situation? Services provided but not recorded total $870. Accrued revenues. What is the type of adjustment in this situation? Interest of $200 has accumulated on a note payable. Accrued expense. What is the type of adjustment in this situation? Rent collected in advance totaling $560 has been recognized. Unearned revenue. What would be debited and credited? In July 1st, on July 1st, 2014, Pisner Co. pays $13,200 to Orlo Insurance Co. for a 3-year insurance contract. Both companies have fiscal years ending December 31st. Prepaid insurance, cash. What would be debited and credited? In December 31st, on July 1st, 2014, Pisner Co. pays $13,200 to Orlo Insurance Co. for a 3-year insurance contract. Both companies have fiscal years ending December 31st. Insurance expense, prepaid insurance. What is debited and credited to adjust the following? Interest on notes payable of $360 is accrued. Interest expense, interest payable. What is debited and credited to adjust the following? Services provided but not recorded total $1,750. Accounts receivable, service revenue. What is debited and credited to adjust the following? Salaries earned by employees of $900 have not been recorded. Salaries and wages expense, salaries and wages payable. What is debited and credited to adjust the following? The equipment depreciates $200 per month. Depreciation expense, accumulated depreciation. What is debited and credited to adjust the following? 2/5 of the unearned service revenue was recognized in March. Unearned service revenue, service revenue. What is debited and credited to adjust the following? Pegasus owed employees $1,300 in salaries that the company will pay in August. Salaries and wages expense. Salaries and wages payable. What is debited and credited to adjust the following? Pegasus borrowed $20,000 from a local bank on a 10-year note. The annual interest rate is 9%. Interest expense. Interest payable. What is debited and credited to adjust the following? Service revenue unrecorded in July totaled $2,400. Accounts receivable. Service revenue